All right, why don't we start? Welcome everyone. Really excited to be here with my friends Mike, Andrew, and Vic. Today we're going to talk about how VCs can effectively support their portfolio companies. This conversation is probably most relevant for venture capital firms, anyone that wants to eventually join a VC or start a VC or is running a syndicate, as well as companies that may be working with VCs or looking to raise from VCs and want to know what to expect as far as the support they can receive from their investors. I'm really thrilled to be joined by the folks on this panel. Um, as a brief intro to myself, my name is Nick Talreja. I'm the CEO and co-founder of Sydecar. We help VC firms in investing in the companies that they're passionate about backing by helping them create SPVs and other fund vehicles. Joined today again by Mike, Andrew, and Vic. And I'm going to let everyone introduce themselves, and then we're going to have a couple poll questions for you just to get a sense of what the audience is focused on so we can calibrate the conversation accordingly. But to kick us off, Mike, you want to give us an intro?
Yeah, hey everyone. My name is Mike Preuss. I am the founder of Visible. Thanks, Nick, for the invite and the entire Sidecar team for setting this up. Visible serves two core customers. We serve venture funds, we serve founders. So on founders, we believe that great communication helps companies grow. And on the investor side, we believe that the same thing. Great communication relationships help venture funds with better outcomes. So excited for the chat today, and thanks again for having me.
Thank you, Mike. Andrew.
Thanks for having me, folks. I'm Andrew Ray. I'm one of the co-founders and CEO of taxware.com. We help companies basically manage US and international sales tax compliance. So if you sell taxable products, services, goods of some kind across multiple states or countries, there are many rather unfun and burdensome compliance obligations around collecting taxes, calculating taxes, being registered, tracking nexus, filing taxes, etc. And so we basically help accounting firms and finance teams that are in-house like solve this, manage this, and kind of hit the button to make the risk go away and manage it so they can think about more important things. So that's us.
You solve for a lot of pain. Thanks, Andrew. And
Right
last but
too.
not least, Vic, really excited to have your perspective as well.
Hello, everyone. My name is Vic Innocent. I'm really excited to be here. I just came back from COP30 in Belém. Frankenbuild Ventures, I am the CEO and founder. We invest in seed stage companies that are in industrials, sustainable industrials. So that includes space, deep tech, and dual use. That includes the blue economy, and that includes energy. That's us.
Awesome. Thank you, Vic. Excited to have your investor perspective here. We'll now go to a couple poll questions to kick us off. The first question is about where you are in your investing journey. This is targeted to those of us who invest in the audience. We'll give everyone 30 seconds to fill this one out. Awesome. We can probably go to the next question, which is for those of us who are investors. Again, when it comes to supporting founders, what do you find most challenging? Great. Keen to see the results here. Awesome. Hopefully we all had a chance to answer that one. Pretty even distribution. Interesting. All right. Thanks. Thank you, folks, for answering those questions. We'll come back to some of that in a little bit. To kick us off, I have a question for the panel here. We talk about value add when we think about investors. I'm curious to know, how has the definition of value add evolved in the last few years? And for the founders in this audience, and Mike, Andrew, as founders, what do you expect from VCs now that that may be different from what you expected 5 years ago? Maybe Mike, you can kick us off on this one.
Woo. I think my first like maybe hot take or question is like, has it changed over the last 5 years? And like one thought I wrote down when I was thinking about this question ahead of time was like, maybe what's changed is like founder tolerance. Like I think like 5 years ago, people said, yeah, we're a value add investor, and maybe as a founder you didn't feel that, and that's fine, what have you. Fast forward 5 years, it's harder to build a company. The market's more competitive and in all aspects of venture building and company building, and maybe like founder tolerance has changed a little bit, where the expectation is like, hey, you are actually value add, or I need you to be value add. But like maybe a less of a hot take. I think founders are really looking for follow through first and foremost. Like how many times there's 3 founders here on this call. Like, have you asked for help from a fund or a potential investor, and the follow through is just like not there, or it just goes unnoticed? Kind of related to that, I think like real partnership. Like intros are great. That's when I think of like value add, I think of like intros, or that's what like the first thing that comes to mind. But like a step below that, what does that really mean is like real partnership, and helping me navigate like some real issues or real opportunities in my business. And then yeah, those are like the 2 things that come to mind, like just like follow through, and just like actually closing loop, even if you can't help a founder, right? Like, hey, yeah, I saw your message that you're looking for an intro to VPs of finance at companies with more than 500 employees. No one comes to mind. Let me see if I can keep working on it. But even just like letting you know that you've been heard as a founder.
Yeah, I couldn't agree with that more. Thank you, Mike. You frequently hear commitments when people are trying to prove how valuable they can be, and it's a simple act of following through that can make all the difference in the world for you. So, Andrew, curious for your perspective.
I don't know that I have a perspective on how it's changed per se. Maybe in the broader media perception, I kind of think of like the term value add as a little bit like if you have to say it, like you're probably not it's like probably don't like I don't know, no investor that I've ever had that adds value talks about being value add. And so I think to an extent it's a bit of a tell. If you have to say value add, you might want to question if you actually add value. I think I have like a personal framework for how I see it that has like kind of developed over the course of running TaxWire. And I think people can add value in there's like brand, just like perception, the fact that XYZ firm or person or whatever adds credibility, anywhere from being a tier 1 VC to just being notable in some specific field or vector is like potentially useful. There is like more like their specific network, and do they have a network that is unique and that they are able to actually leverage for you? And a lot of people don't have unique networks, or even if they have a network, they're not good at following through and using that for you. So it's kind of like what is the network, and do they leverage it well? And then I guess the last one's like kind of something of being like aligned and like a thought partner. And I think that I don't think I want most VCs to be thought partners on my business, frankly. VCs, angels, whatever. Like I don't like, you don't have contacts, you don't have time. Like I don't want, like I have like 100 something angels on my cap table. I don't, unless it's a thing that they're actually like very good at, or I know them really well, like them trying to be a thought partner to me is useless. And so I think it's like, I think this maybe ties to like certain people are good at certain things and absolutely nothing else if you're just don't cause harm, and like you're doing better than maybe some people. And yeah, like I don't know, just like if you don't have any, I actually respect people. Like one of my investors, I think, does a really good job of this, where he told me I am good at this one thing and only this one thing, and I'll stay the fuck out of your way for everything else. And like that was great, and he was great at that one thing, and he was there then, and he leaves me alone the rest of the time, and it's awesome. So that's like my frame on it.
Yes. So sounds like you weren't necessarily looking for a certain type of value from most of your investors. Is that right? Or like, how did they meet that screen of you wanting to work with them?
No, I'd say I definitely was, but it's more so that like that's I guess those are kind of the ways I think people can add value. And so I think like I mean, so there's like generally just I think for certain people it's like I have one investor that's like very like just extremely well networked with like controllers and CFOs. And so for him, it was very much like, I want you in the early days of this company to just put me in front of people. And he did that. And it was
Sure.
super helpful. We got like 5 of our first customers from that. That was a thing. Another guy, it was just like, I thought he was really good. He was really good at fundraising. He had a good network, and he was good people. He referenced well. That was useful. So I think what we've looked for has changed over time. And I think you mostly try to avoid people that are like cause negative value or just like are kind of full of it and don't actually do what they say. That's like there's a ton of people in those buckets. And so you're already winning if you've like screened those out, which I think, knock on wood, we've done a good job of. And then I think then it was really like, can you open doors? And are you at least like, do you see the world in a similar way, such as I? So at the very least, even if we're not like thought partners, you're not gonna be misaligned with how I want to run the business. And then I think I've been lucky with maybe some of the more recent round we raised. Some of those investors that are more like really involved from like a board perspective or something like that are actually more of a thought partner. And so I think I'd probably prize that more as we've gotten to a later stage. But early on, things are changing a ton. You just want people that are not going to cause harm, do what they say, and hopefully open some doors.
Yeah, that's super interesting. I'm gonna ask you one more question as a follow-up. I don't know how many people on the board, or sorry, in the audience take board positions, but there is a big difference when you're serving on a board versus just a passive investor. Curious, Andrew, for you, what do you look for in board members, like someone who's like actively aligned and is actually running this company with you?
I think it's like I have to. It's hard. I've only done it one way for this company, but I think the person that I'm thinking of right now is she knew our industry extremely well. Probably did the
Mm,
most work of anybody when we were like we're fortunate to have several term sheets for this round, and so she did the most work, knew the space the best. Also engaged before the deal was like super hot, so I thought she had like a higher degree of conviction in why she wanted to invest versus it just being a hot deal. Um,
yep.
the and then just like kind of like I think there's like two things. There's you need to be able to trust the person. Um, or otherwise it doesn't matter even if they're super smart and like they know the space really well. If you don't trust them, you're not going to have real conversations with them, or you're always going to be guarded. And so I felt I could trust her and how she saw the world. I felt we could have really honest conversations about the good and the hard things. And I thought she like actually had enough like understanding of the business and what the opportunity and how we saw the opportunity, that like we were not going to be coming from categorically different places around like what we were trying to build. And so, and that's proven really true. Like I think I texted my co-founder the other day. It was her name's Taylor. Taylor's like fucking awesome. And so it was just so, but and we had like other, and you can kind of like see you're just not having the same depth of conversation with some other investors. Or like there was another investor that we talked to that I won't name, just like they were very clearly knew the space really well, but I didn't trust them as much. And so if I didn't
Mm,
trust them as much, I wasn't gonna have as real of a conversation with them. So
yeah. Yeah, and that makes all the difference at the board level. Vic, very curious to have your perspective as an investor. How do you show up to conversations where, people are looking for more than money? They really want to partner with you. How do you express your level of partnership?
I'll answer that by kind of going backwards to the first question a little bit because they're very similar. So, I do agree that the term value add is kind of just, just throw it out there. People use it really often. I will say, however, the landscape is absolutely different from compared to 10 years ago. So I think it is unquestionably there is a different world. When it comes to founders, number one, many founders are way more savvy than 10 years ago. So they don't necessarily even need VC money. So when they're looking at VCs, absolutely, I wouldn't say there's a bullet point checklist of what they want from us, but I think over the last decade, maybe even longer than a decade, the last 15 years, the difference of what I don't want has been really not ameliorated, has been really defined for the new batch of founders. So that discussion of what can you do for me, it has merged a lot from like what Mike had said, introductions, like what Andrew had said, logos. Like back in the day, everyone was like, complacent and happy, in fact, with a logo on the website. People were happy with a soft handshake and an email to just be like, hey, this is who you can be introduced to. But now the discussion is much more long term. So to talk about that partnership, it goes into deeper detail, as in, I do not need to be a thought partner, nor do I want to be a thought partner in your business. That's the whole point as me as a VC investing in you guys as founders. You guys are the experts in what you do. However, the long-term discussion of things like cap table dilution, the long-term discussions of how much ownership should you be talking about with equity stakes for for your founding team and other employees that you're hiring, those kind of conversations happen earlier in the relationship with venture capital. The discussion on if you need VC money, as I mentioned before, but I'll repeat it again. I think, yeah, to answer both questions, the landscape is absolutely different. I mean, let's also think of it from the perspective of the investor, not necessarily VC, but angel investors, syndicates, high net worth individuals. The amount of money that is liquid now versus back then is it's palsy. So when founders are out on the scene, it's not just about media visibility. It's not just about, being in the right rooms for a handshake to get a new check for their next raise. It's also about that strategy of when are you doing a raise? When are you doing a bridge round? If you should be doing this, should you temporarily, be looking at all of your CapEx and be re-strategizing for resources. The nitty-gritty details I will absolutely leave to the founders and their team because that's what they're experts in. But the discussion should be happening with more strategic partners as VCs.
Yeah, those are some great thoughts, Vic, and I want to expand on that with you a little bit. You mentioned founders may need different things and are more savvy today, perhaps, than they were before, which is interesting to hear. How do you determine the appropriate level of involvement with founders you work with, especially if their needs are different?
I think so. When I say savvy, I think people have been brilliant throughout the ages. First caveman to make a circle wheel was brilliant. And today, people making semiconductors are equally brilliant. What I mean by savvy is recognizing the discussion of is my, wheelbarrow invention, my reason for starting the company, is this something that the market wants, or is this just a pet project of mine? So savviness comes in the discussion of beginning their company much more than 10 years ago when people were like, I have a great idea, let's start a company, let's do an LLC, and not even consider, should this be an S Corp, should this be a C Corp, X, Y, and Z. So savviness goes in that respect. And savviness also goes in I had mentioned it before, in the ideal of where money should be coming from and at what stage. So to answer your question on what a founder needs, I look at the whole context of what they're doing. Not only am I looking at, honestly, the CAGR of whatever sector they're working in, but I also, and I know many founders are also looking at this, we're also looking at the landscape of like, what's their 5-year strategy, what's their 10-year strategy, a really frank discussion very early on what they are imagining might be a possibility of an exit strategy. I'm not saying at year one you need to be planning for an M&A, but you should be thinking about things like founders agreements. You should be thinking about equity split. You should be thinking about if it is a waste of time or if it is a good use of your time to enter into a 6-month relationship with an accelerator. Some founders, I tell you, like, hey, considering your Rolodex or considering who you know in your network, this accelerator, as wonderful as they are, is not giving you anything that you don't already had. It would just be another, pat on the back to be like, hey, you got into this. Everyone knows a lot of accelerators, but like, hey, you got into this great one. But that discussion to be like, well, what do you need that one for? Is it for more connections? That accelerator isn't even going to be good for those kind of connections, X, Y, and Z. So it to answer your question, I would say it's a much more straightforward conversation with the founder to know what they already know, to discuss what they think they and their team doesn't know, need help with, or want advice on X, Y, and Z, and also how often. So I can't say for each individual founder until, I'm talking to that founder what he or she needs. But the background for me is all of that due diligence, knowing the sector that they're working in, knowing the market of the sector they're working in, knowing the willingness of new investors to plop money into their kind of scheme, whether it's their platform or their product or X, Y, and Z. All of that is context before we discuss so what exactly do you need? Because when you ask anyone what you need, it's also asking, like what we were talking about, what they don't need.
Awesome, Vic. Yeah, those are excellent thoughts. Thanks for going to depth there with us. Um, I'm going to go to another poll question here for the audience. How do you currently measure the impact of your portfolio support? Awesome, thanks. Let's get those results. Super interesting. Yeah. On that note, Mike, you might have some perspective on this, just given Visible. Curious for you, how do you see investor founder communication evolving, and how I guess how do you and others that are building what you're building, for example, help drive to measurable outcomes?
I think the measurable outcome is almost like a holy grail in venture. We hear from customers, right? Because like, how do you measure like impact of portfolio support? I mean, I think Andrew mentioned like, hey, if you're doing no harm, then you're better than the majority already. And so like, how do you actually measure, especially like if you don't know the outcome of what you did for like 10 plus years? If we're presumably saying the outcome is exits and distributions, then like how do you actually measure that? Especially like with causation and correlation. But I guess in terms of like, on the founder side and the investor side, on the founder side, our take is great communication is like the lifeblood of any relationship. And so as we see, founders that could be interested to hear your takes. I know you do a great job of updating your investors. But as you keep investors along for the ride and updating them of the progress of the business, there's real kind of tangible outcomes from that. I mean, we know just from our own data set that if you do that, you are 3 to 4x more likely to raise follow-on funding when you're regularly updating your investors. And there's obviously a correlation and causation argument there, but the fact is, like, if you're communicating with people that have a vested interest in your business, there's to be better outcomes for you. And I think one of the things that we also talk about is like when the times are hard, or like sharing challenges early and leaving things not to surprise. So I think the time we are a lot of founders we work with or talk to, like, they kind of go into like hermit mode when things are unchallenged and things are not going to plan. That's actually like the opposite of what you should do. You should probably do like the exact opposite of that and be forthcoming with the challenges in the business, because that's the actual time where investors can jump in and really help you with whatever challenge you're working through. And usually you see the opposite of that. So that's just like one other kind of thoughts to put out there. Then on the investor side, kind of go back to the beginning, like, so many times we hear about investors are that we work with are saying, I don't hear from my portfolio companies. None of them are sending me updates, or I really don't know what's going on with the business, which is fair. But then on the flip side, when founders do send them updates or keep them apprised of what's going on, there's like a lack of follow through of what's actually happening when you send the update or fill the data request or whatever the mechanism is, and just feel like I feel like a lack of engagement and thoughtful follow through. So those are like a couple of things I've observed that I think worth sharing with the crowd here.
Thanks for that, Mike. Andrew, curious, as a founder, how do you leverage investor updates? Do you make your asks in those updates, or is it like more like direct hand to hand when you're looking for help?
Both. We send monthly updates. We usually have an ask section. I don't always have something in the ask section, but more than not one that is good for like a broad group. I will have it in there. And then it's usually towards the top. I'm a big fan. Generally, people don't no offense, but most investors don't like read that deeply. It's understandable because they get like tons and tons of stuff. Like, so I assume in fundraising in an update, like people don't read. So there's a TLDR at the beginning and then asks right after that. And then I assume people like 9 out of 10 don't read the rest of it. That's worked well for us. And you often, if the ask is important, it'll be directly in the TLDR. And then otherwise, if I need something, I just hit people up individually, like and with a more targeted, like, hey, I like, do you know this person? Or like, I need a back channel on X, or I need you to like jump in on this candidate I'm trying to close, something like that.
Yeah. I think when I think about this question, kind of speaking as a founder for a second here, I think it really, for me, the consistency in communication, I'm more incentivized to keep a consistent line with those who I feel like are genuinely helpful on the journey and can unpack something I'm going through because they've seen other people go through it or they've been there themselves.
Mhm.
So as an example, like of all of our investors, there's two that I'm actively in dialogue with regularly, like multiple times a month. And it's usually just texts saying, hey, here's how things are going. What would you do in this situation? Or, hey, I'm looking for this person. Or, hey, can you talk to this new hire just to make sure that they're the right person for the role? And I kind of sub them in as if they're, team members outside the company, but they have like a very strong vested interest in our success. And then everyone else is in this pool of getting the investor update whenever I send it. And usually I don't get as much follow through. So I'm indexed less against putting a lot of thought behind that. And I instead put a lot more thought behind the few relationships that actually move the needle for us. And I don't know if that's like bad on me, but that's like the habit I found myself in. I don't know if that resonates for anyone here.
It resonates for me. I mean, I feel like I wonder if this is just how it goes. But I would say I definitely think I put effort into the update, but there's even no matter how good your update is, there's going to be context and depth that's just lacking that you're not going to get on the business and how things are really going and stuff if you were just reading the update. Um, and then frankly, even if like you're just not going to have the same, if you're not talking semi-regularly, even if it's just via text with the founder, you're probably not going to have they're not going to have that same level of like trust and openness with you. And so it's just like, I think it like, that's how it ends up working. And so those few people usually tend to be the ones that end up mattering most though, that are like that engaged and you can have that texting relationship with, and everyone else, it's like, they kind of try to jump in and contribute how they can, but it's probably fine that it's that way.
Yeah, for sure. Yeah. And the Rolodex of people that offer support to founders is generally much broader than just the investor base, which is great. It's cool to see that places like New York City, where you are, Andrew, San Francisco, et cetera, there's still a really strong community around the founder community. For emerging managers that have lean teams, I'm curious what frameworks or tools can help them scale portfolio engagement effectively. I'm going to start with you, Mike, just given that you're building a tool in the space, but I'm sure you have perspective beyond that tool. Care to share any thoughts here?
I would say leveraging anything. It's kind of actually shocking how a lot of venture funds invest in technology and software technology that they don't leverage it themselves. And I think there's a lot of reasons that we don't need to unpack there, but I'd say the most effective ways we've seen people scale is usually when you are equipping a non-investment partner with technology. So the second you let GPs get their hand on technology or software, is the second I think like there's a lot of friction in how it gets adopted or used at all. Now, understood that might not be possible at the early stages of you becoming an emerging manager, but I think like we've seen the most success when you can equip non-investment team members with software technology, whatever that might be, right? That could be something as simple as an Airtable, a no-code tool that you've vibed yourself to something like Visible. But I'd say like even just starting with something is better than usually what's happening, which is like cobble together email and maybe spreadsheets, something like that.
Do you have any thoughts on leveraging LLMs or agentic solutions to like do the job of like an associate, where like you're taking in diligence material and trying to like summarize it or understand it in an objective way?
I don't have any takes on like the deal flow side or the investment side. Like a lot of the work we do at Visible is on the post investment side, so it's hard for me to give like an opinion on the deal flow side. Part of me is like, if LLMs can actually do a good job of sorting through like deals and like what are we actually all doing here, and like reasoning, like like should we just give a bunch of money and train an LLM and have it invest maybe. It might be good at cutting out a lot of like the noise or things that are not relevant to your fund or to you as an investor. um but I am like highly bullish on LLMs on the post investment side from both like a workflow standpoint. So like this is what we launched an our own MCP server. So now we have, anyone in your fund can go into ChatGPT and say, hey, I'm about to go meet with Andrew at TaxWire. Can you summarize the last 15 emails and updates that he's sent me? And so some of that will be visible data, some of that will be connected to Gmail. So I'm really bullish on like actually equipping investors to be more in tune with what might be going on before they meet with the founder. As well as like a lot of the workflows that happen in the background, right? So I'm preparing for my next AGM or LP update, and I need to grab a bunch of data for that. Too, we have a lot of customers are using Visible plus LLM or something they've created themselves for like valuation work. Like I gotta go and mark to market every quarter all my positions in my portfolio. A lot of the data is being powered by Visible for that, plus like my own modeling of how I'm writing up or down investments. So I'm super bullish on a lot of the use cases for the post investment side, as well as like we're starting to see some interesting things just around like just like being able to use natural language and text. Like I'm like, okay, of all my portfolio companies, who are the ones that have mentioned signing a Fortune 500 client in the last quarter, or of all my companies, like I need to introduce Andrew to any companies that have mentioned anything around tax, right? So I think there's like interesting use cases now that LLMs can actually help with like a lot of portfolio support in a very scalable way, where maybe that wasn't the case because I might have lived with like a single person or in siloed inboxes. So very bullish there. Less I just don't have as much context on like the deal flow on the deal flow
Fair.
side of things. Yeah.
Yeah, Vic, maybe you have some perspective there that you can share with us.
Yeah, for sure. I agree with Mike, especially on the idea of enabling the use of technology for non-tech persons or non-tech roles or roles that are not typically using technology. We at Frankenbuild Ventures, we definitely have a strong hand on the discussion on LLMs. For me personally, I believe that LLMs have a good use in the deal side. However, I think more of VC firms and actually more organizations in general should also be using SLMs, small language models. It's the idea of, hey, you are going to the ocean and you've brought a straw and you are taking a sample and you want to know the salinity of that. You're never actually going to know the salinity of the entire ocean. Instead, having those SLMs, because we have our own server, we have our own LLM that we have created, and we also created a few virtual environments for some SLMs to play in. So it's a nice language ballet between the two machines or the multiple machines speaking to each other, as in you are able to digest large big questions that usually come from humans because the way we speak is just very broad based. And then you have the SLMs coming in with much more minute, detailed, finite, precision ability to dissect what the underlying problems are. So both in the use on the deal side as well as in the use in even due diligence, or on the side of investor facing for investors who want to take a peek on the inside of what a VC firm is doing, or in the case of a founder, what a peek into what a founder is doing. So we got the ability, or we had the opportunity to speak at this at the United Nations in February. So long story short, AI and LLMs and all of this, it's not going anywhere. But I really do think that this kind of broad-based solution application of just like, hey, let me just use an LLM. Let's discuss further on what it's used for and when a local LLM or small LLM should actually be used in that case.
That's super interesting. Vic, do you have an example of utilizing tools like this in your practice that you think might be relevant to the audience here? Like maybe just like
Yeah.
pulling an example and just sharing like how that is used for you.
Yeah, for us, we ended up using it because we look for founders who are in a very niche field of a niche field. We look for sustainable industrials. It wasn't enough just to have a network. It wasn't just enough to scrape Reddit. It wasn't just enough to kind of knock on people's doors and say, or universities to be like, hey, what kind of research is out there? There's also that level of insight that is absolutely necessary as well. So we structured some small SLMs that were sector specific while also using a large LLM to help with creating investment memos. We're not replacing any of our associates or analysts, but these are just tools for insight to help us move along. Some work in the conversation or in the founder call while we're doing it so that we know, hey, there's actually some insight that I should be asking about this new, what is that called? A new a new effort in the government that is relevant to this sector X, Y, and Z. So that coming up in conversation leads to a much more nuanced conversation between me, my analysts, and my associates while we're discussing the deal at hand. But I also use this to the effort for our founders, both the founders who are in our portfolio, as well as the ones who might be one day in our portfolio. It's insight and perspective. It's kind of like having another genius associate with you.
Yeah, fascinating.
Yeah.
The last question I had for the panel is around how a thoughtful approach to founder support can become part of an investment strategy and not just a post-check benefit of working with an investor. I'll probably kick us off, speaking from personal experience here. Um, I ran a small fund prior to starting Sydecar. That's kind of what led to the formation of Sydecar as a concept, was realizing we didn't want to deal with a bunch of pain in the back office, and we started to automate it for ourselves. But when Dave and I started investing and started a syndicate, and we're kind of trying to prove our thesis as VCs, we would often offer help as a means of like getting deal flow because we didn't have any other right to be venture capitalists other than being smart lawyers who knew we could open doors and help people figure some things out. So that was our sort of like edge, was offering help people would otherwise have to pay for in a way, and helping them answer questions and touch other people are in our network as a means of getting them interested in who we are and then allowing us to invest in them. But curious for anyone else here that angel invest. I know Vic, you invest, but Andrew, Mike, if you guys angel invest, like how do you get access? How do you offer your help in advance?
Um, I like angel investing. I did more of it back in the day. Now I kind of my only real, I just like, it's someone I know really, really well is like starting a company. It's like share coal, like whatever. I have like small scout fund through one of our investors. Um, or like I use someone's product a ton, or because we're just like in the space and it's like that. And even still, I usually just like know the person really well. I don't do anything else besides that. And I don't know, for whatever reason, I guess those people like having me involved. I don't know why. Ask them. I don't think I'm particularly useful. The I think with investors, it's just like I guess like having a very clear, it's just like a clear grokkable thing. Like I guess when you're fundraising or you're a founder and CEO and you're talk to lots of investors, you kind of quickly kind of pattern match that like most VCs are all kind of like trying to pander the same type of generic value add, and it's kind of obvious. It's actually unique if I see a way that I think there's something unique about you. I'm already thinking of potentially
Mm,
working with you over someone else, or you're just kind of in the bucket of like generic capital source. Respectfully, even if I like you as a person, but it's just like there's not. I like this person, but I don't really see or where they're going to be useful to us. That's like super different than someone else. And those are like things we talked about before. It's like if you have like there was one fund that our pre-seed that we took over other people because they had a very specific network of controllers, CFOs, and like people that we would actually sell to. And that was like very clear. That was very obvious. It was something most other people didn't really have. and they had a when I referenced them, they had a track record of actually like getting people like through those doors, not just saying they had a network, but like other founders would back it up. Um, I think with so I think it's like you like kind of like look for like something. It doesn't have to be everything. It just have to be something very clear that this person's good at or useful at that like might make you want to take their money over someone else's. It could even just be, I guess, like how much you think you'll enjoy working with or appreciate having that person around the table. But there needs to be something. Otherwise, it's like if you're 10x oversubscribed and you're like stacking everybody up, you're gonna like pick the people that did stand out, and everybody else is gonna end up going to the side.
Yeah, you mentioned, in your latest round that it sounds like your leader or whatever this large stakeholder was got to know you way in advance. Did they offer any help or any guidance or anything that really set that person apart versus others?
Not really. I would say, or at least I think in that round, it wasn't really there wasn't like a specific type of value that I was like really, I guess, looking for. But besides the like capital and the partnership, I honestly think, I think at a certain point, like most of my investors are not like proactively being like, how can I help with like, it's like I will like let you know what I want to thing, and otherwise like something just like I'm doing my thing and like don't bug me. And like I just like I don't have time, and so I find, yeah, I don't know. So I don't I actually find if anything people like offer, but it's more of like, hey, if you need something, like let me know, which I appreciate. But it's so I don't think for this last round it was really that. It was more of like looking for a certain type of partner and engaging in the process thoughtfully was what was unique, but it wasn't like a specific type of intro or something like that.
Yeah, that's a good point. In a way, that dance before the investment is kind of like a prelude to what a relationship could be like when you're actually invested.
Totally,
So it's a good chance to like
totally.
demo like what that could be for the founders that you might want to work with. Mike, what's your experience been like in this field?
Yeah, I was just kind of related to that is if you are proactively it's like when with like early stage founders or first time founders, um, like when investors are helping you and they're not on their cap table yet, that's usually like a great sign, right? Of like what the relationship could be versus someone saying, oh yeah, I'm going to do all these things for you once, I'm an investor. But if they're not helping you before they did invested, I think that's like just an interesting signal, right? To like think through. It's like, okay, how this person said, hey, Mike, yeah, great combo. How can I be helpful? And you're saying, yeah, well, outside of investing, here are three people I want to introduce introductions to, and if they go and do that before they've even written a check, I think that's just a great litmus check on what the relationship could look like, um, after they invested. I'd say like really take your time thinking about the person or people that the firm or the person, and people change at firms too more often now than they have in the past. So I think through that as you're accepting money. But these are some of the
Mhm.
longest relationships you'll have in your life. You're going to work with this person for 10 plus years, and really thinking about what that means before you accept a term sheet for both sides. Because yeah, like I said, exits are taking longer. I think the average NPS of most lead investors is lower than any of the major airlines in the United States. So
How is that calculated? I've never gotten a survey.
we ran a survey at some point, and we literally just said like, we ran an NPS score on like your lead investor, and like how likely would you be to refer your lead investor to another founder, 0 to 10, and the NPS score was lower than like most US carriers.
Oh my
So that kind of
goodness,
goes back to the
that's
whole do no
bad.
harm.
Yeah,
The whole do no harm. Yes.
yeah. Vic, how do you make sure your NPS score is high?
I buy whatever Mike is selling. I think he brings up a really good point, at least from my fly in the wall perspective as an investor. Actually, a number of connections, talking back to that value add, are actually between founders themselves. So, as a VC firm, connecting founders to other founders who they will also by passive resistance, they will also be in that relationship with them for the next 10 years in proxy through me, that actually
Mm,
builds a wonderful network of like, okay, this will actually lower your capex if you have this relationship with this other company that is adjacent to your own world anyway. You may have found them naturally, but let's talk about how you can work within this new found web that we're creating. So, yeah, I think between Andrew and Mike, those answers were pretty strong, though.
Thank you, Vic. Want to give the audience a chance to ask us questions as well. Looks like we got one question um, about someone that enjoys building operational efficiency and workflows for scale, and they're building a platform that's focused on post-investment to onboarding to activation to enablement as a VC. And the question is, what are the key focus areas that this group has seen that most VCs miss or founders want or need? Um, Maybe Vic, we'll start with you, and then I'd love to hear from others also.
Um, I think a sector that founders sometimes miss, and of course it depends on the founder, him or herself. If this founder has been a repeat founder, I find this less an issue with those who have gone on to their third and fourth iteration. But for younger founders, the discussion on dilution. I think that should happen a lot earlier for
Mhm.
realizing how much equity is being given up, when, at what time, what does it mean in 5 years, X years, blah, blah, blah. So I would say that when it comes to founders who are more evolved because they're on their third or fourth output, they've exited X, Y, and Z, that's a whole different conversation.
Yeah, so dilution ownership over rounds seems like an
Yeah.
opportunity to have a conversation earlier.
Oh, for
Mike,
sure. Yeah.
yeah, Mike, you see a lot of these conversations early and through the investment. What do you think?
Yeah, if I understand the question, I would say just ask, right? Like as part of your onboarding experience with the founder coming to the platform as a fund, kind of as part of that onboarding, kind of ask like, okay, um, here's our suite of here's our menu of offerings that we can offer you, Nick, right? Ranging from sourcing executive talent to helping you raise your Series A to whatever it is, like, and just establishing the agreement ahead of time, like, and just setting the mutual agreement that here's the expectation of how we're going to help you. Here's what you need to do for us, and just kind of both agreeing early on, and yeah, I really just ask and then agree and commit to it.
Awesome. Andrew, you touched on some of this earlier as far as like people staying out of your way and you'll know when you want someone to help, but anything else come to mind?
Um, yeah, I don't know. I think that like time is just so zero sum that like, and I think there's like a lot of performativeness around value add and like stuff that I don't know, you just like and like I want to if you have a relationship with someone, it's like you can kind of get them when you need them. And beyond that, it's like I think a lot of the rest of it, unless like maybe you're at a later stage and you're just trying to like hire 20 engineers and so you want someone's portfolio support team, like I think there's probably a place for that. Like it's just like I just like don't like have time for I don't know, the rest of it just kind of like means very little to me, and so like I almost prefer just don't like I don't want to waste my time on it. So it's like if I need something I'll let you know, but like yeah, I don't know, that's just I think my perspective's been colored kind of on that I view a lot of the rest of the value add stuff and processes and such as being at the either nice to haves or something that is like great for raising money from LPs but not necessarily the thing that's going to make the business succeed.
Yeah, for sure. Fundraising is like a part of business building that is completely different from the act of business building. And oftentimes is like
Yeah.
this song and dance that's kind of painting a picture of some reality that you have to go then build brick by brick. And the glory of building brick by brick is very different. And I think one thing in my experience is like anytime you get a question about the business that doesn't seem related to like our reality or kind of throws us off, like it's time I'm not spending building, it's time that someone else is context switching. So I like would much rather have people just focus on building between those events. But IR is important. So I would say like if IR is important to you as a fund, making clear where your expectations are up front, like what you need, so that like we
Mhm.
can meet those expectations as founders would be really helpful. And similar to what Andrew said in my personal experience, I find out who's helpful and I spend my time with those people and they're kind of like my Sherpas on this journey. And then others, I just either they're not as helpful because they didn't follow through, which is something we talked about. I think follow through is extremely important. If you don't follow through once or twice, then I think there's a loss of confidence that it's worth asking you for help. So if you want to have that relationship, I think follow through is super important. Those are just my personal observations.
Yeah, I super agree with you, Nick, especially on the back and forth conversation of if as a founder you're going to take VC money, know what you're going to be having to give to VC as well. So that discussion on like what can I do or what will you need from me as a founder to make you successful, that is passive because as a founder you have to have your business first and foremost, but it's great to know, the chapter by chapter play by play of what they'll be asking in the first place. You don't ever want to be, sidelined and you don't want to be surprised by some of these asks. So I'll double tap on that. Damn, I hate that term, double tap. I agree on what you just said for that one.
Thank you, Vic. Luis shared a question with us, two questions actually. How do founders come up with their financial needs and size and time them? Second question is how do founders consult, who do founders consult to guide how to structure their milestones in line with investment needs along the way? For the first question, how do founders come up with their financial needs and how do they size and time them? Maybe Andrew, you kick us off with an answer to that one.
Just to make sure I understand the question, where was it written at?
It came in. I'll try to reframe it for you. For example, for you, how did you scope out how much capital you needed to raise? Like, what is it based on?
Yeah, usually some mix of the amount of capital like we think we want to go after, like to like milestone, get to the next milestone, some amount of like burn, spend, salary usually is like being the big thing, plus like some period of time, plus some buffer. And then more realistically, like it's kind of that plus depending on how much conviction you have and the opportunity you're going after, it's like add on if I can get even more, get more, and go bigger tends to be my orientation. Within some degree of reason. But yeah, it's usually just like bottoms up model plus like just go get the money
Buffer.
and go get after it. Yeah.
Yeah, it's very much an art. I don't think it's a science for
Yeah, I
anyone
don't think so
racing.
at all. I think people would be surprised how little it's actually like a science. At least maybe be pre like I don't know, maybe all of OpenAI's rounds are now very scientific. I don't know. But
Yeah. I remember for our pre-seed, we raised a little under 2 million. And the last slide was like a use of proceeds that I just like someone asked me like how are you gonna use the money? I was like, I don't know, we're gonna hire people and then figure it out. Like, ask me in 6 months how
yeah.
we're using the money. But yeah.
Yeah, literally. The model's kind of, especially at pre-seed, the model's a little bit made up. So
Yeah.
yeah.
Mike, you see a lot of this stuff, a lot of pitches and material. What any thoughts here?
I second what you both said. I'd say as long as you have a solid answer of why you're raising the rounds you are or the amount of capital. But I fully back what you both said there. It's also been a long, Visible is interesting. Like we haven't raised money in a long time, and we're in this weird like profitable SaaS company that's not like venture backed, but we serve the venture backed industry. So it's just like we're in a weird world ourselves. But I co-sign what you both said.
Yeah. Thank you. The second question is around who do founders consult to guide how to structure their milestones along the way? I can tell you from personal experience, work with my board, work on setting a budget. But as far as how this ties to investment needs, um, I think the rubber hits the road for us around runway. So just like looking historically at how much we burn and then projecting out like number of years that we want to exist to prove out certain additional business growth milestones that we think will either A, get us to like another raise and prove like we're advancing at a certain pace, or otherwise get us to like cash flow break even and profitable. And it's again an art, not a science, but don't know, Mike, Andrew, if you guys have other thoughts as founders.
Pretty similar, I would say.
So talking to upstream investors as well, right? Like, people that might be friendly, just understand like, hey, what are you looking for? Like what gets you excited is a good way to kind of back into how you can think about structuring milestones.
Yeah.
Yeah.
One
Also the
asterisk.
market.
Yeah. I would add
One
to that
asterisk. Go ahead.
equation. Oh, I'm so sorry. I would add to that equation the customer discovery. Absolutely. You need to look at your burn, but just like what Mike said with investors, also doing much more customer discovery than you think to reanalyze your milestones.
Awesome.
What's the
One thing,
asterisk?
Mike, on that point of like talking to investors for the next round, I find that investors just want to say words sometimes. It does not mean they're going to invest if you do any of those things. So just like treat all that with a massive grain of salt.
It's true. It's true. Yes.
Yeah, I think meeting
Cool.
with
Well,
investors
yep.
between rounds is mostly helpful for getting a pulse on the market. And potentially if you're
Yes.
like in a good position, you can kind of turn there are people that are good at turning that into a preemption at times. But yeah, it's like not like you're basically fundraising, but not fundraising. It's like you're playing a different game. It's like, yeah, it's not because it's actually going to give you like an accurate data point on like what someone's going to fund your business at.
Yeah. Yeah. I found that as a founder, the best way to fundraise is to actively be not fundraising always. And then money just comes. But cool. I know we're coming up on time. Anyone have any last questions? I'll give the group about 10, 15 seconds to lob one over. If not, we'll wrap this up. We got one just as a comment. We got a comment. The comment is, as an investor putting in more than $250,000 and up in safes and pre-seeds, I would not feel comfortable with founders saying they don't know how the money would be used and come back in half a year. That's a fair point. That was a call out for me. I'm sorry if
I
you're an
think that's
investor.
I think that's also a callback to the fact that times have changed. Genuinely, 15 years ago, yeah, it would have been a little bit frowned upon, but it would have been so normal that people would have just like been like, whatever. But now, yeah, absolutely. I agree. So I don't think, Nick, you're necessarily in the wrong. It's just, it's a sign of the times, truly, that that kind of answer absolutely flew back 15 years ago, 10 years ago, maybe even 8 years ago. But
Yeah.
today, where people are holding on to their cash a little bit longer, where returns aren't coming as eloquently as they wanted to, yeah, people are a little bit more inquisitive.
For sure. We got another comment that you rock, Vic. I agree. You rock.
Yay, you guys rock too.
Oh yeah. Well, thanks everyone. Really appreciate you being here. Thank you so much to the panelists, Mike, Andrew, Vic, for joining us. Thanks for making time.
Thanks for having me.
All right.
Thanks for
Cheers,
having
guys.
us. Cheers.
Bye.
Yeah, great convo. Be well.